the government, document that tells the country whatever, or the direction the country is going. So anytime there's a budget presentation, analysts like ourselves, we follow a lot, because the budget is the fundamental document that government used to run the country. So you have the finances, you have the economic policies, you have the project, you have everything in it. So anytime there's budget, we know the direction of the country. So in November.
Hello, lovely viewers. This is your girl, Belinda. You can call me BB, Bella, or Bella Bell. I come to your homes, your offices, your schools, your cars with the program Talk With You. Talk With You is a show that talks about and prioritizes issues that affect the ordinary Ghanaian.
Hello viewers, my name is Julius, an economic and then fiscal policy analyst. I just want you to urge you to subscribe to Elbebeto TV and then media. But VAT is the indirect taxes, and VAT is, let me say, the mother of all indirect taxes.
Hello lovely viewers, Merry Christmas to you all and a prosperous New Year. This is your girl Bella Bell. Today we are back here in the studio with a very lovely gentleman. He's an economic and fiscal policy analyst. We are here to discuss a very important topic on tax. I'll leave him to introduce himself very well to us, and then we'll get on with the show. Mr. Gyimah, you are welcome.
Thank you, Belinda. Good to see you.
Good to see you too.
It's been ages.
Oh my God.
Merry Christmas to our cherished viewers and the listeners, and then those online, and then I think special greetings to producer. And then it's time of the season, so I think the Christmas mood is still there. We hope for the new year and the new things. So it's good we are back, and we are ending the show with the year.
New things, new economic policies.
Yes. It started last November. November the budget was read, and then the November is and the budget is actually the government document that tells the country whatever, or the direction the country is going. So anytime there's a budget presentation, analysts like ourselves, we follow a lot, because the budget is the fundamental document that government used to run the country. So you have the finances, you have the economic policies, you have the project, you have everything in it. So anytime there's budget, we know the direction of the country. So in November the budget was presented. There were some tax policies that was captured in the budget. There was some economic policies that was also captured in the budget, and then that from the beginning of the year, January, February, with the country, the economy was faced with a lot of things. There was inflation, cost of goods and services was going high, cost of petroleum products was also going high, was escalating, and this was largely due to the invasion of Russia in Ukraine. Russia supplies crude to the international markets. Ukraine also supplied vegetables, cereals, sunflower oils and the likes and all that. Russia too also supplies gas to Europe. So anytime these two countries are fighting, obviously it's going to affect the global economy. Yeah. So sometimes we as Ghanaians, we should understand from that perspective and then zero down to our local economy.
But Ghanaians, we are not understanding that.
Yeah,
we can't understand it, because it looks like all we hear from the government is Russia-Ukraine war has affected us, COVID has affected us. Meanwhile, COVID happened in 2020. And now in the country, we are not even hearing about COVID, but we are still paying COVID tax.
Yes.
Can you talk more about the taxes and how it's affecting us as a country?
So interesting. What we normally do is that Ghanaians should have patience and then understand the subject matter. It is quite technical, but usually we are just, there's tax increase or there's tax deduction and all that. But the issue is that, like you rightly said, in 2021, back 2020, COVID struck, and then we're faced with situations where movement was restricted. People couldn't go around their businesses, both individuals and companies as well. So when that happened, it affected the economy. global economy was affected, local economy, that is our Ghanaian economy, it was affected because there was restriction, imposition of restrictions as well. So when that happens, it means that productivity will be zero, because once you move, when there is movement of goods and services, it increases productivity, it brings money. There's money too should be circulated in the system. So it has that effect. And then obviously it will affect our taxes, because when taxes are imposed on incomes and taxes also are imposed on consumption, so once you earn money you pay tax, once you consume you pay tax. So that should set the tone for our discussion, meaning that there are two major types of taxes we have in the country or even across the world, which is income taxes and then consumption taxes. So you earn money, you pay taxes. You consume goods and services, you pay taxes. So the main taxes that we have in the country is a direct tax or income tax, and then an indirect tax. So direct tax is just on incomes on individuals and businesses, and then the consumption tax, which is the indirect tax, is when you consume a particular product, like you buy a tin of milk, you buy bottled water, you go and you shop groceries, you pay those taxes. So the avoidance is that if you don't consume, you don't pay. That is your safe net. But with the income, so far as you are earning an income, and we can earn income from three main sources: either you are in employment, self-employment, you have your own business, and then you are doing what? Investment. So these are the three major areas. So as with the individual, it's either you are working for yourself or you are being employed. So that is income or individual tax, or self-employed. Then businesses, companies that also operate in the country, at the end of the year they make some money, they declare profit, that is their income, so they also pay taxes on it, and there are certain rates that the companies also pay. And then once you are also doing an investing activity, meaning that you are into maybe rentals, or you build houses and then you sell, you are doing maybe buying shares in the stock market, you are putting your money in other businesses and you earn dividends and royalties and all that. So those are the classification of the sources of what? Income. So that is the tone for taxes in Ghana. So there is the income tax, and then there is the indirect tax, which is more of a consumption type of tax. But usually there are benefits and then, you know, disadvantages here and there. So far, usually it's convenient to take money from people in the formal sector. So for us in employment, you know, once at the end of the month, before you take your salary, then your payroll master or that payroll accountant deducts the income tax as source, which we all see. Now, the other area, which is the informal sector, that is where we have a lot of Ghanaians working in that sector, and then there hasn't been enough. Exactly, it's not like they are not paying.
It's very small as compared to those in employment.
Yes, because the setup is not formalized. So until government makes that deliberate attempt or deliberate effort to address the challenges in terms of infrastructure, logistics, the convenient way in the informal sector, they can't collect enough money, you know, from the informal sector. And we know that the informal sector is the engine of growth, because that is where we find a lot of Ghanaians operating in that sector. I mean, how many people are in the formal sector? Those that we are employed, we are very few. But it is convenient for government to be taking taxes from us, because the sector has already been formalized, and then it is a withholding tax, meaning that your employer deducts it and push it to government, so it's safe for government. But the informal sector, government must go and chase them and a whole lot.
But in this situation, it really puts a lot of pressure on those in employment, because
yes,
a large percentage of the tax comes from that. So what do you think that what structures can the government put in place to be able to get the informal sectors into the tax nets?
Yes, so the issue is one controversial tax type that was introduced, that is E-Levy. Okay.
E-Levy.
Because, I mean, look at our brothers in the artisanry works, mason, carpenters, those selling at Abuso, Kanshi, electricians, plumbers. These guys make a lot of money. A lot. They even make money more than people in the formal sector, because they charge per contract. and an individual will be managing about 4 or 5 contracts. If it is a building project, he is there. If it is, a company building or putting up an office complex, or an individual has, they are there, but they don't pay any tax.
Yeah.
Okay, so the discussion was that mobile money is a platform that a lot of Ghanaians, whether you are in informal sector or not, were using that service. And government provides the platform because government is a regulator through National Communication Authority. So the thinking was that at the time, the trade transactions or the trade volume of mobile money transaction as at the time, that was last year, was around some 500 billion Ghana cedis. It means that people that send money over the phone, 100 cedis, 200 cedis, 300 cedis, when we accumulate it per year, it amounts to that 500 billion Ghana cedis. So the idea was that if government can impose some form of tax, okay, on that amount, on that trade volumes, it means that government can rake in our 5 billion Ghana cedis, okay, from the system.
But don't you think that tax, the E-Levy taxes, government is somehow trying to steal from the people? Because it's not monies that government have worked for, is the people of Ghana who have worked for those monies and put them in their own accounts.
Oh yes, the discussion was that, I mean, if you are in the formal sector and then your salary is being paid, government deduct the tax. Then again, if you are using the mobile money platform to transfer money to your mom or your dad in a village and all that, it's the same money that has already been taxed. So why should we tax?
Tax on tax.
Yeah, tax on tax. But the issue is that the mobile money is a service, a platform. Your money is in your account, all right, but now you are taking the same money which has already suffered the income tax, and you are transferring via a certain medium. So that is where government is now coming in. It was quite harsh. That is why we saw the debate in parliament, and the minority, majority, they even fought over it.
Yeah.
The discussion was that, I mean, the rate which was 1.5%, the minority wanted 1%, and even at the time wanted to even bring it down to 0.5%, because already the telcos are also charging a certain percentage when we transfer money. So that thing came up. But the main challenge for government, government do not work like we do, like individuals work, businesses also work. Government don't work. But government duty is to provide an enabling environment. What it means is that they provide the logistics, they provide building roads, building hospitals, improving on electricity and all that. So that is the enabling environment. Once you do that, you allow individuals to thrive. It means that they can locate their businesses, they can set up factories. I mean, we are in the studio discussion, there's electricity on and all that. Look at the machines and equipment here. So once government set up those enabling environment, businesses will be thriving. And when businesses and individuals are thriving, then government takes its tax. So that is the symbiotic relationship between government and individuals and business, or the tax approach. So government shouldn't sit down idle. No, you create that environment for businesses and individuals to thrive, then it imposes tax from them. So the source of funding, that should tell us that the main source of funds or funding for government is taxes. Just as businesses work and they also sell things, products or services, and they have their revenues, government revenue is tax. So that's why we have tax revenues. So whether we like it or yes, as a country, as a sovereign state, what will give money to government is taxes. So that is the fundamental discussions Ghanaians should understand before we can even zero down in.
I think Ghanaians, we all understand that taxes help the country to develop, but looking at the number of taxes that we have in the country, I think it's on a higher side, and it has imposed a very high living standards for Ghanaians.
Yeah, that's true.
Yeah,
that's true. The issue is that, I mean, government comes, government goes. So, and anytime there's a budget, budget tells you forecast or estimate for government revenue and then government expenditure. So for our individual, for ourselves, you want to do something, how much money do you have, how much money you are going to spend? So there's a revenue side and there's an expenditure side. More often than not, or most of the times, government expenditure far outweighs the revenue.
Yeah.
So when you have that an imbalance, budget deficit, automatically something will happen. And this also comes down to the manifestos of the various political parties. We promise that we do this, we do that, we do that. I mean, I want us to understand the fundamentals of the whole discussion, because anytime the expenditure is more than the revenue, it means that government should look for money from somewhere to finance the expenditure or impose taxes. So if you are following the news, that is why this year there's something like debt restructuring, debt exchange, because the monies, if that balance is there, whereas or where the expenditure is more than the revenue, it means that government must look for money. And where government is going to look for the money is through imposition of taxes, number one, primarily, or go and borrow. Okay, so in government budget expenditure, there's an item called interest payment. So it means that government borrows from people, individuals, businesses, from domestic market and also the foreign market. And at the moment as we speak, government is at the IMF. So the IMF is the foreign market. So the discussion is that so far as there's going to be an expenditure overriding the revenue, it means that there will be a financing gap or a budget deficit. Okay, if the revenue is more than the expenditure, it will arrive to a budget surplus. But most of the situation, there's a budget deficit, and once there's a deficit, we have to address the deficit, and that is what government has been doing. And either you impose taxes that will bring burden on your people, or if you want to save your people, then you go and borrow, and that will also bring a latter burden because you have to pay interest on the borrowing.
Wow. Lovely viewers, we would go on a short commercial break and we will resume shortly. Stay tuned.
Hello viewers, my name is Julius, an economic and then fiscal policy analyst. I just want you to urge you to subscribe to El Bebeto TV and then media. You can catch El Bebeto TV and media on YouTube on El Bebeto TV and then El Bebeto Media. On Facebook, you can catch El Bebeto on El Bebeto TV and then media. Same on IG, El Bebeto TV and then media. You can also subscribe to some of their services, which is El Bebeto Photography, El Bebeto Educational Complex, El Bebeto Graphic as well, and then photography. They are into training of IT as well. So for all your stop shop on graphics, photography, and then IT training and then media training, just subscribe to El Bebeto TV. Just hit their button and then you just receive a notification. Leave a comment in the comment section and thank you for watching. Just keep your dial on El Bebeto TV. Thank you.
Hello viewers, you're all welcome back. We will continue our discussion with Mr. Gyimah. Mr. Gyimah, can you explain to us more about the income tax and the payroll tax?
Okay, so like I said earlier in our introduction, one of the main taxes that government collect from the citizenry is the income tax. And income tax is very broad. It's a broad area, just as the indirect taxes. Now, example of some of the income taxes is the pay as you earn. Once you are employed or you are in the formal sector, you pay. The more you earn, the more you pay. So that is also deducted at source. There are other withholding taxes, withholding on goods and services and works. Okay, and then primarily there is also government brought in a withholding VAT. Okay, but VAT is the indirect taxes, and VAT is, let me say, the mother of all indirect taxes. Example of some of the indirect taxes: number one, obviously, is the VAT. There's Get Fund levy, NHIL levy. There's even tourism levy in the people in the hotel as well, and there's tax stamp. Okay, this one is collected on, you see, when you buy products from the shops, you see some sticker on it.
Yeah.
Even when you buy mods, you know, this is a tax stamp for people at least to collect taxes from businesses, okay? And then there are also excise tax. Excise tax is just a type of tax that is imposed on goods and services, but those that are harmful to, you know, human or the citizenry. So you find them on alcoholic beverages and the rest, so that people will not consume a lot of alcohol or cigarettes and all that. So that's excise. It's a form of a punitive tax, okay, just to limit people from consuming that goods and services. So those are examples of what the indirect taxes. But the mother of all indirect taxes is what? The VAT. We'll leave it there, we'll come back to it. But when we come to the income taxes, like I said, there is the payee tax, which is the income tax on individual. There is also an income tax on self-employed. There are two types of individual, whether you're in the formal sector and then if you are self-employed. It does not mean that if you are self-employed, you don't pay tax. The issue here is that most self-employed people do not pay tax. Or let me say, to pay is, for me, is kind of a big word for me, but I want to say contribute. They don't contribute to socio-economic development of the country, because as a nation and as an individual or as a citizenry, it is our civic responsibility to contribute to government's agenda. Okay, we put government there and we should give money to government. So the giving is our contribution to paying. Means it looks to me as if government has performed a certain services for us and we are paying. No, I just want us to use the term contribution, okay, because it is our civic responsibility. So when we come to the income tax, okay, we'll pick how the mechanism of it, how is individual income computed, okay, before we tax it. So the discussion is that how do we compute income or chargeable income? When it comes to the tax, has its own language. That is what I want to break it down. When it comes to income tax has its language we speak. Okay, so I was explaining that there are certain languages that we speak when it comes to tax, but tax has its own languages. And I was saying that the income tax has its language. So you'll be hearing more of assessable income, chargeable income, and I will explain it, something like total cash emolument and all that. Tax is a whole, it's a whole field. It's a whole thing altogether. When it comes to indirect taxes for the VAT, its language, you'll be hearing taxable supplies, taxable goods and service, supply of goods, supply of service, supply. So the indirect tax language is all about supply. So you'll be hearing taxable activity, taxable supplies, what is supply of goods, what is supply of works, what is supply of services. But because we are dealing with the income tax, let's come to the income tax. Like I said, we pay taxes on our income. And in Ghana, the sources of income is that it's either you are an individual, number one, or you are a self-employed, number two. So the categories of individual is this: those who are self-employed, and then those who are in the formal sector, okay? Then there are also businesses. So businesses also, they work, they go through their activities, whatever they are supplying, they make their profit at the end of the year, if there is. Not all the time that businesses will make profit. Sometimes they also report what losses. Or an investment. So if you are doing these investing activities, you are buying shares, you are receiving dividends from the companies, you are investing in the stock market, you are into hotel or building rentals and all that. So investing activities, you also pay taxes on it. Now, the thrust of our conversation will be on the income tax, but that's where we suffer a lot. Yeah. And then we should be able to look at the mechanism of how income is being computed. Like we do say, there is that thin, line between accountant and then the tax expert, okay? Yes, a good accountant can be doing your taxes for you, but not all the cases tax people are accountant. The issue here is that accountants report income or profit in a certain way, but in taxes we report profit or income also in a certain way. So let me walk us through how, or the mechanism of ascertaining what we call a chargeable income. So if the accountant will say, okay, I'm paying you your salary, That's what the accountant will say. So that's the language. But we have to, in tax, we have to, you know, metamorphosize the basic salary.
Can you break that down?
So
not sure my viewers.
It simply means that the accountants are paid salaries.
Okay.
Raw like that. But yes, it is salaries. But the issue here is that salary has to be wired. We have to dress it. We have to pass through certain, you know, codes to be able to arrive at what the taxman will refer to as chargeable income. Okay. So like I said, the language is that you'll be hearing more of a chargeable income, assessable income, and then total cash emolument. Okay, so the skeleton is that before you can arrive at an income to tax, whatever income, I mean, your business can pay you all the incomes that you want to pay. They can pay you all the salaries, the allowances, and everything. That is okay. So in the account, you see your basic salary plus allowances. You arrive at your gross salary or your gross income. Okay, then you pass through it through deductions. Then you arrive at what? Your net pay. Then you take it. Then you go. That is to the accountant. But now, to be able to compute that item called income tax on your salary, we have to, you know, change the language from that income allowances to something that is called a chargeable income, because not all your income
is chargeable.
That's right.
Okay.
So in the tax, we will look at your income and then juxtapose it. So what we want to look at or assess is that, number one, we want to look at all your cash allowances. So the cash allowances includes your basic salary that your employer pays you plus other allowances. And in the tax, it's referred to as total cash emolument. The total cash emolument simply looks at all your gains and profits from your employment. The key thing is that it is a gain, it is a profit. So it means that once you are paid, it's your profit, because at the end of the month, that is what you've worked for. And again, in addition to what you've worked for, you can happen to get other things that your employer will give to all employees, which you benefit, and that is a gain from the employment. So the first thing to arrive at is what we call total cash emolument, okay, which sums all your cash incomes. So your basic salary plus all allowances, you get your total cash emolument. Now, when you arrive at the total cash emolument, there is another income called assessable income. After arriving at the total cash emolument, the law gives us two benefits. There are two benefits which you've been worrying me about, which is, you know, sometimes you are being employed, your employer gives you fuel. Okay. So the fuel, or a car or a vehicle or even a driver, most businesses or most companies, they provide a driver, they provide a vehicle, they provide a fuel. So these three components to certain categories of what their staff, from the director down. Not all of them enjoy those benefits anyway, but at least the average is that most businesses allow or gives their employees fuel. So we enjoy what we call fuel benefit. This fuel is not part of your basic salary, but it's something that you earn. So that's what I said, that your total cash emolument is a gain and profit from your employment. But in addition, there's something called benefits in kind. So that benefit in kind means that, like I said earlier on, the total cash emolument is the summation of all the cash things from your basic salary plus the cash allowances. We earn certain allowances, but it is not in cash terms. So once your employer provides a vehicle for you, it's an allowance, but it's not quantified. That's right. Once they give you fuel, it's an allowance, but it's not quantified. Okay. Then if they give you a driver is a human being, it's an allowance, but it's not quantified. So once you enjoy those services, I'll just dwell on the fuel, because the fuel cut across. The law says that once you enjoy the fuel, let me just introduce this. When it comes to the income tax, it is a law. You know, taxes are law. So the law that governs income tax is called the Income Tax Act 2015 Act 896. Okay, so that is the law. I have to put that on record. So whatever discussion that we are having is in the income tax.
Okay.
Tax is law, so you have to be very careful. Okay, so the fuel benefit is monies or allocations that is given to the employee as a result of what? Going to your employer to work for your employer. Now, that is a benefit in kind. Okay, now the treatment is in two ways. Sometimes the staff elect to receive the fuel in cash, everything in cash. So once you receive everything in cash, it means that we subject all your fuel allowance, which is in cash, to full tax. But the law allows, if you want to do some tax avoidance, it has given that if the fuel is being paid in kind, it means that you do the fuel coupon system, or you can, if these days, you visit the various fuel stations, you see they have the Tom card, the Gold card, and the rest. So once you do that arrangement or that negotiations and you receive that fuel, it's a benefit in kind. They will give you a card, a Tom card. You go to the fuel stations and then you buy your fuel. You don't directly receive cash. But for the purposes of cash transactions, it means that if you receive all your fuel in cash, they pay you fiscal cash. It means that we subject everything to tax. So the advantage or the avoidance is that we advise that people should take advantage and treat the fuel as what? A benefit in kind, so that a certain portion of the fuel amount will be taxed. And as we speak, the law, if you treat all your fuel in kind, it means that the law allows only 250 will be added to your total cash emolument. Like I said, I've already laid the foundation for what is total cash emolument, and I said that total cash emolument is your basic salary plus all your cash allowances, utility, rent, what have you, child education, everything, whatever allowances that the employer gives to the employee. Then in addition, if you are receiving fuel, you treat your fuel as a benefit in kind, meaning that you receive it in a coupon form or in a Gold card or a Tom card form. It's a benefit in kind that the employer provides. So we have to tax the law allows to tax an amount of 250. So imagine if you are receiving a fuel of 3,000 cedis, and then it is a benefit in kind. It means that only 250 out of the 3,000 is taken out to tax. But if you receive all the 3,000 in cash, you tax all the 3,000. So that is the difference. That's a lot. So to advise our viewers, our listeners, we encourage that you also encourage your employers to go into that form of negotiation and treat your fuel as a benefit in kind, so that only 250 out of the 3,000 I use as an example will be taxed. Again, there's another benefit that is called an accommodation benefit. So in the ambit of the law, there are two benefits. Okay, benefit that is accommodation
under
the income tax. Yes, all the discussions we are having is in the Income Tax Act. So some employers also provide accommodation to their staff. So if you have been housed, okay, or you've been given a bungalow and then all that, if the bungalow is furnished or if it is unfurnished, if it is a shared accommodation, this is also a benefit that is being given to you. Now this benefit does not come in as cash, but the taxman will look at it and assess it. Okay, so the two benefits is that whether you are receiving an accommodation or you are receiving a vehicle with car with a driver. Now we've discussed how to treat the vehicle, that is the benefit in kind, the fuel part. Now we are looking at accommodation. Again, with the accommodation too, like you've been given a place to sleep because of or as a result of your employment, we have to tax it because it is an extra earnings you are getting, but it does not come in cash, so we won't tax everything. Okay, so the law will look at the total cash emolument that we have already computed, okay, and it will tax a certain percentage of it. Okay, so that is the position of the law. The issue here is that, like I said, once the money is being paid to you, to the accountant is salary, but in terms of getting at the tax, we have to pass it through certain areas, and that's what I'm taking as true.
Okay. So with the percentage that is being taken as tax from the income end, does it cut across with everyone in different organizations? Do we have a fixed percentage for every staff in every organization?
No, not that we have the percent. Government or the law has already set the percentage, and then if you could allow me, before we apply those percentages, we have to determine what we call a chargeable income or a taxable income, and that's what I'm building on. We can't just tax or apply all your income to the rate. No, we have to arrive at a taxable income. Like I said, the language with income tax is that we'll be talking about taxable income, chargeable income, assessable income, total cash emolument. I have developed the concept, so I've developed what is total cash emolument. Now what I'm adding on is assessable income. So now the assessable income is your total cash emolument plus the two benefits in kind, which is either accommodation or the fuel or a driver with car. Okay, once we add those two, you arrive at your assessable income. We're discussing how to arrive at the taxable income or the chargeable income before we can subject it to tax. Anytime an individual earns an income, you should be able to qualify the income into a chargeable one. Not all income are taxable anyway. So like I introduced the concept that there are three sources of income in the country, whether you are earning your income in employment or you are self-employed doing your own business. So these are the two categories. Or you have business or businesses, that is companies, corporations and the likes, or you are also doing an investment activity. So these are the three sources of incomes, okay, according to our law. So the law qualifies all incomes into these three main areas. So we are picking on the first two, how to compute their taxes for self-employed individuals and employed or people in the formal sector. You get it? So that is the mechanics we are going through, and I explained that before we can arrive at the chargeable income, we have to first of all look at the income option for the individual, and it starts from your basic salary plus the cash allowances. Once you add these two, you arrive at what the accountant will call it the gross salary, but in the tax language we refer to it as what? Total cash emolument. Like as the English goes, it's what? Total cash. Forget about the emolument, it's total cash.
Emolument.
Yes,
I like that word.
yes, it's emolument, exactly. So we are looking at all your cash items, that's why it's total cash. Then when we finish all your cash, we add on the non-cash, which I refer to, or the law refers to as what? A benefit in kind. So the mechanics is very simple. First of all, you pick the basic salary, you add on your cash allowances, and as for cash allowances, you can have 1,001 depending on the condition of service for the organization. There is child education, there is utility, there is rent, there is funeral, there is a whole lot. Different organizations pay certain allowances to their staff, so you bring all into the tax bracket or into the tax basket. Then when we finish the cash, then you add that to your basic salary, you get your gross salary, but we want to call it your total cash emolument. Then we come to the non-cash items, which the two areas or the two main ones the law refers to as benefit in kind. And the benefit in kind, we are talking about accommodation benefit, and accommodation benefit comes in the form of accommodation furnished. Okay, so some accommodations are furnished, some of them are unfurnished. So we look at the furnished accommodation and then unfurnished accommodation, and we even look at shared accommodation, because some accommodations are being shared by individuals or the employees. So not all of them, it has the tax rate. Okay, then again we come to the motor vehicle benefit. So the motor vehicle benefit comes in the form of whether you are being provided with a driver, fuel, and then a vehicle itself, or you are provided with a driver and a vehicle but not fuel, or you are provided with fuel only, or you are provided with a driver only. So that also comes in 4 areas. So depending on where you fall, we pick it. But what cuts across is the fuel. At least not all staff or not all employees will earn a driver with a vehicle, or in another way, organizations will only provide fuel for most of the staff, but will provide the vehicle and then the driver to highest ranking officials, okay? But what cuts across is the fuel. So the fuel, to what I was advising is that you should be able to quantify the fuel, but for the purposes of tax avoidance, okay, it should be in kind. That is good. Very, we've done well. Okay, so the benefits in kind, the one we are centering on is the fuel, because the fuel cut across, okay? So sometimes fuel, these days when the fuel price was skyrocketing, some organizations, they peg their fuel allowance to the market rate. So you can earn about 3,000, 4,000, or depending on the number of gallons that is being provided for the individual.
Right there. Lovely viewers, we are still live on El Bebeto TV. We are still discussing important issues about tax. Don't go anywhere. Let's continue with Mr. Gyimah as he gives us a lot of explanation on tax. Let's go, Mr. Gyimah.
Yes. Thank you very much. I believe that today our viewers are getting a lot of, tax information to be able to plan their lives,
including me.
Yes,
I've learned so much.
I mean, once you live in this country or in a sovereign country, you have to pay taxes, but you should be able to find your way to navigate around the taxes. Okay, navigation means some point you must avoid it, some too you can't.
How do you avoid tax in this country?
Oh no, there's tax avoidance is legal in the law. Okay, like I said, the first avoidance is that don't earn an income.
Hey,
and
how can you stay in this country and not earn an income? It's impossible.
Same as the.
Or is it possible to stay in this country and not earn an income?
That's right.
It's virtually impossible to do that.
So that's what I'm saying. That those that they don't earn anything, they don't have anything to do with taxes. So when you just sit down, you don't go anywhere. You are not earning an income. You are good to go. Or if you are business and then you report losses, it means that you didn't earn anything, so you don't pay any taxes.
Okay.
But so far as you are earning money, income here means represent money. Once you are earning something, an economic activity, a viable one, of course. Okay, and usually one of the key characteristics of an effective tax system is that it should be fair. So fairness here means that you pay the equal amount of taxes or the right amount of taxes. And then how will you as an individual or businesses will be able to navigate around the taxes is by first of all knowing the tax laws, okay, or by having a tax advisors to be able to advise you on the tax implication, because every transactions that you do in this country, whether you are buying, whether you are selling, whatever activity that you engage in the business field has some tax implications. So you can only navigate yourself around when you know or you have those information. And I'm happy that El Bebeto is currently engaging some of us to be able to come on your platform to be able to let our viewers, our listeners, those who watch us know some of the tax information so that they will help them plan their lives or navigate around it. Okay, so there's tax avoidance and there's tax evasions too. So tax evasion is illegal, but tax avoidance is legal. It means that the tax laws or the tax framework has certain incomes that they exempt them from taxes, and as the discussion goes forward we'll be able to bring in. But today we just want to look at how to compute the chargeable income and tax, because that is the fundamentals of the income tax, especially for those in the individual sector and then those who are also self-employed. So the issue here is that we were taking our viewers through the computation of the taxable income, the chargeable income, and then the likes, because you have to be able to ascertain the chargeable income, which is different from your gross salary, okay, before you be able to subject it to tax. The law has its own mechanics of arriving at the chargeable income, and that is what we are going through. So what I just said or what we've discussed is that before you get to the last bottom, which is the chargeable income, you have to look at some three areas of income. The first one is your basic salary, okay. Then the basic salary plus cash allowances, you arrive at your gross pay, or what I want to refer, or the law refers to as what, our total cash emolument. That is what, basic salary plus what, allowances, cash allowances. When we finish, we come to what, benefits in kind, and we said that if you receive a benefit in the form of accommodation or in the form of motor vehicle, these two benefits, you know, have some tax implications. So we look at the treatment of what, the accommodation and then the motor vehicle. But we were discussing that what cuts across the motor vehicle is what, the receiving of what, a fuel allowance or a fuel coupon. And we are saying that to avoid the tax on the fuel, don't receive the fuel in cash basis, but do a coupon system that will only tax your fuel amount, just limited to only 250 cedis, and that's good, because these days you can be paying about 3,000, 3,500 depending on the number of gallons that is being provided to staff. So if you are paying, subjecting all the 3,000 to tax, and the law is only giving you 250, if you treat it as what, a benefit in kind or a fuel system, you can only tax with 250. So that is good for us to be able to do the avoidance and do proper tax planning. Then once we add those two benefits in kind, which is the accommodation and then the motor vehicle, then we arrive at what we call assessable what, income. It means that your actual income the taxman can assess. But before we arrive at the chargeable income, the law allows what we call personal reliefs. Okay, so the personal relief, there is Senate. As an employee, you contribute to Senate.
Are the personal reliefs the same as the tax reliefs?
Yes, the same as the tax reliefs.
Okay.
So after assessable income, okay, where assessable income means the addition of what, your basic salary plus what, your allowances plus the benefits in kind. And the benefits in kind, we have accommodation benefits, and then we have what, the motor vehicle. And the motor vehicle, the key one is the fuel. So when we add all these categories of income, we arrive at what, assessable income, meaning income that we can assess to tax. But before we can finally ascertain or arrive at the chargeable income, the assessable income that we have derived, we have to what, pass it through what we call tax reliefs, okay, or personal reliefs. So the Income Tax Act 2015 Act 896, which is the framework for our discussion today, allows individuals on certain incomes, okay, give them some relief. Relief means free, or you are exonerated, or you are exempted, that kind of thing. So number one is your Senate. As an individual that you are working, we also contribute to what, to Senate. So the individual or the employee portion of the Senate, which is the 5.5% on our basic that we pay. You know, when it comes to Senate, the computation is that employee contribute 5.5% and employer adds on 13%, making it what, 18.5%. What the employee contributes, the 5.5% portion, the Income Tax Act allows that as what, a relief. So that one will be used to what, reduce what, your assessable income. I hope you get the chemistry there, because we don't want to put all your income to tax. The more you earn, the more you pay. Mind you, it's a payee tax. Okay, so the relief is going to help you reduce your assessable income, then so to say you pay what, a lower tax. So the beauty of tax is that, like I said, it's supposed to be fair. The law is not just only interested in taking the tax, but it should be fair. So it is giving you some form of what, relief. So the first relief is the Senate, and the Senate is limited to the employee portion or the employee contribution, which is 5.5%. Again, in addition to the Senate, there is other reliefs, such as what the Income Tax Act, okay, number one is child education. So if your ward, okay, you up to the child education gives a personal income tax relief for 3 children, okay, and they should not be more than 18 years.
So that's all. With the tax relief, does it how does the employee assess that relief? And is it being added to the net pay every month, or is just a one-time thing in the whole year?
Yeah, so that's a good question. First of all, the personal relief or the tax relief is not free. You know, the government.
It's not free.
So it's not automatic. Yes, let me qualify. Thanks for the correction. It's not automatic. If you don't make an application, you don't enjoy it.
Oh, okay.
So first of all,
does it go for both private and
both yes,
public sectors?
Yeah, private and
all
public.
The teaching fields.
Or everybody, and most of our sisters and brothers in education, the teachers, they enjoy those reliefs.
Oh, really?
So yeah, they enjoy.
I know someone who never enjoyed that relief.
Oh, then that person should.
Oh,
you see, like I said, it's information, right? So we're dealing with ascertaining the chargeable income, and then as we are bringing the discussion down, what I want our cherished viewers to pick from today's discussion is that so far as you are working as a self-employed or working as an individual, there is a tax for you to pay, and that tax is your income tax, and it is usually referred to as the payee. What the self-employed people don't do is that because they don't keep proper set of accounts, because they earn all their money, they sell, they make their sales, and then they put it in their pockets, they only go and buy, and then that kind of thing. They don't go through that salary structure form, payroll proper. But the concept is what? The same. So the concept is that first of all, if you are a self-employed person, okay, you are doing your own business, you should set some money aside as your what? Basic salary, meaning that you have to pay yourself. Yeah. Because all the revenue or all your sales that you make has to balance, you have to balance certain amount or certain expenditures in it. But you have to make sure that you put some money aside as your what? Basic salary, because it is on that the tax will what? Apply. If not, we'll tax your whole amount of revenue you've made. Okay,
Mr. Gyimah, so with all these taxes, looking at our country, especially in most rural areas, are we seeing the impact of those taxes in our schools, in our hospitals, on our roads? Because personally, I've been to some places where the roads are extremely poor, and the schools it's not anything to talk about. Are the taxes working for us as a country?
Yes, I would say yes or no. It's a yes or no affair, because like the GRA usually put it, your taxes are our future. Okay, like I said, taxes, contribution to taxes, okay, is a civic responsibility. I don't want to say payment of taxes, because but the relationship is that we, like I said, government revenue primarily comes from taxes. Yeah. And for that matter, we must contribute to the developmental drive or agenda of government. This thing has to come in more political, because the monies that we collect as taxes, it goes into the consolidated fund, and when it goes to the consolidated fund, government has to come out with a budget, which we discussed that in the earlier submission. And in the budget, you see government programs, government projects. So like I said, it's a yes or no affair. Yes, centrally, because the money goes to central government coffers, which is the consolidated fund, government has to plan with the money. So you see government comes in, they are paying school fees through the free senior high school. Is our taxes, okay? And then we see some roads being built here and there. Power, electricity, okay? If you follow the news, government contracted independent power producers, and our life should be sustainable. Again, restoration of teacher training allowances, nursing allowances. So all these things is what our monies are being used for. But because we are in Accra and there's a lot of developmental drive in Accra, okay, like we've been discussing, Ghana is virtually Accra. Yeah. Because if you are in Accra, you see everything. But when you go to the rural areas, you don't see most of the development that we see in Accra, corresponding same in the rural areas. And that is a question that has to be addressed by our politicians, our MPs, our district assemblies, our MMDCs, and what have you. Because one way or the other, they also receive government grant in the national budget. In the expenditure side, there's something called grant to other government units, which is metropolitan, municipal, and then what? District assemblies.
Just hold it right there. From where you are going, I'm sure this is a whole different topic, and our time won't permit us to go into that. So our cherished viewers, we would come to the end of today's show, Talk With You on El Bebeto TV, and we'll bring you a different
before
discussion.
Before you wrap up, what I want our viewers to pick from our discussion today is that, first of all, we discuss the mechanism of what computing your taxes yourself, or if you are a worker, how your taxes are being what deducted. So that is what I want our cherished viewers to pick from our discussion today. I think we ran them through what the basic salary is, what cash allowances is, total cash emolument, arriving at the assessable income. Then we subject the assessable income to benefits in kind. We talked about the accommodation benefits and then motor vehicle benefits. Then we arrive at the assessable income. Then we subject it to what? Personal reliefs or tax reliefs. We talked about what? The Senate that we contribute. Then other reliefs that is being granted by the law, which is marriage or responsibility relief, child education, aged dependency, old age, and then disability relief. So these are the various relief options that is available to the individual, whether you are self-employed or you are in what? Formal employment. Then once you deduct all the reliefs from your assessable income, you now finally arrive at what? Your chargeable income or your taxable income. It is that taxable income that we are going to what? To tax. So the more you earn, the more you pay. Then we subject it to what we call the graduated what? Rate. A certain income is taxed as what? 0%, which is free. A certain income is taxed at the next 5%. A certain income is taxed at 10%, then 17, then 25, 30. So that is the rate of what? Tax. But like you said, time is fast spent.
Yes.
But I want our viewers to really get this for me.
I'm sure
it will help them in planning
really
their
followed
taxes. That's right.
And gotten all the input of the information that we have put across today. And for me, I'm happy to pay my taxes, but some of them I would try and avoid it because taxes on my income, in fact, is a lot.
It's a big deal for you.
It's too much for me.
What we also have to do is that we have to hold our government accountable. If I say government, what do I mean, or who those are referred to? Starting from the district level, our assemblymen, to the DCs, to MCs, to regional ministers, coming to, you know, state ministers and what have you. I mean, we know the hassle and the pain, the struggles of the ordinary Ghanaian trying to contribute to taxes. It's not easy. So far as at least we are contributing our quota, once they receive the money, they should plan it and use it judiciously to the benefit of all Ghanaians. I think that's what that we want. Yeah. We want to see our hospitals functioning. We want to see our roads fixed so that we can drive smoothly. Once people can, exactly, our schools. The government is doing well in free SHS. I mean, that's a fantastic policy. I believe one day we'll have time and talk about the achievement in the free SHS sector. It's wonderful. Initially, I didn't actually get a concept, but I've seen people in the rural areas like you rightly mentioned, and they were able to make straight 8As because of free SHS. So these are the things that we want to be seeing our taxes do for us. Our hospitals are running efficiently and effectively. Our roads fixed. We have sustainable power. And these are what I refer to as the enabling environment. One government, you know, do that for us, we are good to go, and I believe that we can move our country forward.
That's good. Thank you very much, Mr. Gyimah.
Thank you for having me.
As Ghanaians, we also have a part to play in paying our taxes or in contributing to taxes in the country for the entire development.
Yeah, just one more. Now, payment of taxes are online, it's digital. So our viewers should also watch out for, let me say, people who come in to help them. Now you have to, you know, log in online and all that. So once they need assistance, they should visit the nearest GRA offices, and then what the accountants that are also helping them, or the tax advisors that are also helping them. Now they can do everything by themselves with just some help. Yeah.
That's quite easy.
Yes, for the convenience, you know, one of the effective or good characteristic of an effective tax system should be convenient. I don't see the reason why going to pay taxes I should suffer or I should what struggle. It's a contribution.
Especially
So you should put
my own, when I have my own business.
Yes, now you can pay taxes with Momo, you can pay taxes online, you can file online and all that. That is the level we have moved to. Now we are going to the digital space. So taxes has actually moved from excellence, that's right. Exactly. So we've moved from the manual tax system. So if you are still dwelling in the manual, I mean, you are way behind. Now we are digital. So yes, and that is what we want our government to be doing. Once we contribute to them, they should also provide the infrastructure, the platform, the networks. That is the symbiotic relationship government has with its people.
All right, our cherished viewers, we've come to the end of the show for today, and this is El Bebeto TV, and your host is Bella Bell. We'll bring to you another beautiful episode on taxes very soon, Gyimah, right?
Yes. Taxes, so and then the economy.
More about the economy, more about the direct and the indirect taxes, and there are so many other things about tax that we need to know and to educate us on. So stay tuned and give us your comments in the comment section, both on YouTube and on Facebook. We've come to the end of today's show, and this is your host Bella Bell on El Bebeto TV. We'd like to thank our sound man, our cameraman, our producer, and our lovely guest, Mr. Gyimah, for enlightening us more on tax. And we'll come again to your screens very soon